Hello, welcome to our Hutchings Consultants podcast, maximising the value of your pharmacy ready for sale, which is designed to appeal to pharmacy owners who are thinking about selling their pharmacy business in the next 5 years. In order to maximise your sale price and minimise the stress, it is important to allocate time to plan ahead for a sale. So whether this is your first time you have sold a pharmacy, or have done so many times before, our short podcast covers some of the key areas you should consider before placing your business on the market. My name is Sam Barlow, and I'm joined today by two of my colleagues, Director Scott Hayton.
Morning, Sam. Nice to see you.
Thank you. And Senior Pharmacy Consultant Paul Steed.
Hi Sam, good to be here.
Both Scott and Paul are involved in valuing and selling pharmacies on a daily basis throughout the UK and are keen to share their wealth of experience with you. So, Scott, Paul, I know there are a number of points you wish to cover today, but I understand the first and maybe the most important thing you recommend to potential sellers is that they plan an exit strategy.
Yes, that's right, Sam. I think my advice to sellers is to allow yourself sufficient time to prepare properly for a sale. And I would normally recommend somewhere between sort of 2 to 5 years in advance of coming to the market.
Sometimes you can have a unexpected health issue or something similar that arises, meaning that you've actually got very little opportunity to plan, and that can obviously affect the results that you achieve, the tax that you pay, this kind of thing, if you haven't had that planning opportunity.
Yeah, you've got to allow yourself, say, sufficient time to resolve perhaps unexpected potential issues that could arise. So you're far better to spend the time prior to coming to the market as opposed to perhaps when you found a buyer, and which could actually slow down your transaction.
It's fair to say that most people probably wouldn't know what problems were in there until they actually go looking for them. So we'd always suggest to work with a specialist accountant and a tax advisor. You really want to be understanding the most tax efficient way to sell your business and maximise the proceeds of the sale well in advance of actually bringing it to the market. Particularly as some issues that we do often see arise can take several years to actually resolve and bring that situation back into a tax efficient means of selling the business.
Really? Okay.
I've been involved in a sale recently where there was some sort of VAT issues that sort of arose, and it took sort of many months to actually sort of resolve that satisfactorily. So again, as I say, it's better to do that prior to a sale rather than sort of once your sale agreed, and it could be something that could unsettle a buyer. So yeah, absolutely. Yeah. It's time well spent. Say preparing in advance.
Paul, I understand some of the most common issues that arise during a sale are around leases. Is that right?
Yes, I'm afraid it is something that crops up fairly or more regularly than we would like to see, Sam. The actual issues on leases can affect a timescale of a sale completing if it's something that is not addressed prior to a sale and arises during a sale. But even sort of prior to that, it can actually affect the saleability of the pharmacy business.
Right. Okay.
One of the common things that we see is that someone will bring a pharmacy to market and it's got a lease that is less than 10 years, for example, and that can be an issue for lending banks. Quite often the bank loans are for a period of 15 years, and they want to see that mirrored in the actual lease term itself. Yeah. So they can guarantee that they're going to be getting those payments coming back in.
Right.
I think it's certainly something where if you've got, as Scott said, a lease less than 10 years, many banks will be reluctant to lend. It's not to say it's impossible to find a bank that will lend against a lease of 10 years, but it
makes it more difficult, doesn't it?
It's more of a challenge, and if it's a challenge to do so, then it'll be a challenge for a buyer, and that can obviously have an impact on the saleability and what the eventual sale price is.
Okay, so are there any other issues?
Yes. Sometimes you'll come across cases where a lease has been excluded from particular sections of the Landlord and Tenant Act. The common issue we see is sections 24 to 28. And that actually removes the legal right for a tenant to request an extension of the lease at the end of the term. So if you've got 9 years remaining, something like that, and you've not got that right, that is going to be an issue for someone looking to purchase a business. It draws a line in the sand at the end of that 9-year period.
Right, okay.
We do have to be careful around this point, as we're not qualified solicitors, and this is obviously a legal point, but say where leases are outside of this Act or exclude the legal right to request an extension, it can be difficult for a buyer to obtain lending.
And that can make a buyer nervous, can't it, basically?
Yes, it does. Yeah, absolutely. I think another thing to obviously be aware of, if you are trading as a limited company and the intention is to sell that limited company, you should ensure that the lease is actually held within the company name. And this can take some time to adjust if it's not held in the company name to do so. So it makes sense to do this prior to the start of the marketing to again avoid any potential delays to a sale once you're into that process.
I've got a case right now actually where the chap is in exactly that position. Initially the landlord, which was a large corporate, they came back and they said, "Yep, that's fine. We'll do the assignment," and then all of a sudden, just no communication.
Really, right?
Yeah. So they've had to go down the route of threatening legal action in order to get that landlord back on track. It is now moving forward.
Sure,
but
okay,
these are the kinds of things that you see.
Yeah. Okay.
I think also just to sort of point out, I think what we tend to find in our experience is that from the landlord and the landlord solicitor's perspective, this isn't necessarily seen as a sort of high priority.
No.
So therefore, as I say, it's something you're better to address prior to agreeing a sale if you can. Otherwise, as I say, it's something which can sort of just add to the sort of stress, I guess, really trying to resolve it sort of once you're into that transaction.
Okay, so a lot of issues there. Have you got any then advice of how sellers should mitigate against these points?
It's a good idea to review the lease in advance. Make sure that it's of adequate length, that it's in the company name, and placed under the Landlord and Tenant Act if it isn't currently. You're very welcome to send us in a copy of your lease and we can take a look at it. But I should caveat that we're not qualified lawyers. We do have recommended lawyers that we work with. And some of those will actually review your lease free of charge. So again, just bring it to us, and we can give you a bit of assistance and guidance. Certainly,
I think certainly it's important that a solicitor who is experienced in pharmacy sales, reviews that lease, because again, one of the common issues that we do have is where there's perhaps a high street solicitor who can look at a lease but doesn't have that knowledge of pharmacy, because it is a very sort of niche area, and they can perhaps make recommendations or give advice which in the long run can affect the saleability, and we've certainly had examples of that over the years. So I'd certainly recommend any sort of seller seeking that proper sort of guidance, and again we can sort of help and assist and certainly point potential sellers in the right direction in that matter.
Lease is often overlooked really as a critical part of your business. It is your right to trade and continue trading, so it's very important that you get it right.
Okay,
absolutely,
that makes sense. Okay, so is this an opportunity to address other company issues as well?
Yes, it is absolutely, Sam. I think a seller or potential seller should certainly be speaking to their professional advisors, including sort of their accountant and tax advisor. Those advisors should understand the business intimately, and should be aware of any potential issues that could arise, and hopefully sort of foresee that. I've already sort of mentioned or touched on a VAT issue that arose during one of my sales, but that's perhaps just one example of some of the things that a seller needs to be aware of.
One of the key things as a seller that you need to understand is the structure of the sale. So if you're established as a limited company, for example, are you actually going to be selling the shares in the limited company, or are you going to be selling the business asset out of the company? That's pretty critical, and obviously the tax implications of both. Often within limited company, you can have other company assets in there, property or investments, and you need to understand what is going to happen to those, because that can also delay a sale in terms of getting those investments or property out if you need to. So the aim really should be to fully understand all of this and the tax that you would pay well in advance of the sale.
I think also if you are planning ahead like this, then you've got time to, or you feel less pressure to perhaps make certain decisions. Whereas if these kind of questions are coming at you sort of during a sale, you're trying to run your business, you're trying to progress the sale as well, and it just adds pressure perhaps at a point when you don't need it. So it's better to address this sooner rather than later.
Yeah. I mean, I had one case very recently where the accountant just hadn't considered the sales structure. And, we had been told a certain thing. We got the offer, we got it to sale agreed, and suddenly the accountant started talking, and it all then came into question.
Oh, really?
And it delayed things for 4 or 5 weeks right at the beginning.
Right, okay.
We couldn't get the deposit in until all of this was sorted. So, that's over a month lost.
Yeah, okay.
And also, that question arising so early in the transaction, again, from potentially it could undermine a buyer's confidence in the transaction, and that's definitely something you don't want to jeopardise.
Not a good start.
No.
Okay, so let's talk about cash. Sometimes owners have built up a large amount of cash or investments in their business. Can this create an issue?
Quite often, large cash sums in the company is actually a sign of a very successful business.
Yeah, sure, yeah.
But it can potentially affect the saleability in certain circumstances. So if, for example, you've got a very high percentage of cash in relation to the turnover of the business, that can give some concern probably to a more inexperienced buyer.
Yeah, I would agree. I think it's something which more sort of first-time buyers will have sort of difficulty understanding, whereas an experienced buyer who's been through the process before may own pharmacies and be in a sort of similar position themselves. They're sort of less likely to have a concern, perhaps so much.
Okay, so I feel like I understand that, but can you unpack that a little for me?
Yeah, so let's say you had a business with a turnover of let's say 600,000, and it's holding cash of 1 million. So for a business of that level of turnover, typically you'd be looking at a first-time buyer, and that's a situation where they may not fully understand how it works with this cash, and they may even find it harder to actually secure the bank funding. They will need to employ the right professional advisors who understand the process of dealing with the cash. But initially it can make those buyers a little bit nervous. It just needs explaining to them in the right terms.
Okay.
Yeah, I think it can definitely be a challenge making sure that buyer is not, should we sort of say, too scared by the prospect of taking on that level of cash. And as Scott has mentioned, there are ways to deal with the cash in the business in a way that doesn't necessarily mean that a buyer has to borrow more money to pay for that cash. But the sort of challenge that we have many times with these buyers is perhaps to say those advisors just don't understand how to deal with it, and if they don't understand it, they're less likely to want to recommend their client be involved with it as well. So that's something that we are here to educate that buyer in our role as best we can.
And we do have the accountancy arm as well, which is helpful because it means that we can actually get an accountant on the phone to their accountant, and they can talk it through in accountancy terms and generally get an understanding for it and get them comfortable.
Yeah, I mean, our sister company, Hutchings Accountants, so they specialise in pharmacy, so they have that experience, and they deal with this regularly. So, as Scott mentioned, we're in a position where we can provide advice to those clients and their buyers to assist in this. But
from a seller's perspective, there are ways that you could reduce that cash balance before you bring it to the market, which makes it a little bit more palatable for people, and can still be tax efficient for you as well. Things like pre-sale dividends and going back on previous year's pension contributions and this kind of thing.
Mm-hmm. But I think overall we do look to, wherever we possibly can, secure a buyer who will take on that position. But so there may be things that need to be put in place to mitigate perhaps the level of the cash, as Scott's mentioned. But overall, there are strategies of dealing with that.
Okay, and is it fair to say that buyers and their accountants will scrutinise the business accounts?
Absolutely, Sam. Perhaps even more so in these current times. So certainly, both the buyer, their accountant, and their bank will look closely at those accounts. They'll want to understand how the business is operating, profitability, etc. And it's also vital to therefore keep a control on the business costs in the years leading up to a sale as well.
Mm-hmm. That's right. Yeah. So one of the common things that we see is sellers giving quite generous wage increases to the staff just before the sale goes through. That, of course, impacts on the bottom line profitability of the business and therefore the price.
Right.
And this is something that the buyer has to kind of take on and continue with going forwards.
Right. So as nice of a gesture as that is, at the end of your tenure, the buyer is inheriting that.
Exactly. And we have seen other ways to do this as well. I fully appreciate. You've had loyal staff over the years. You do want to reward them. A much better way that we've seen in the past is to give those staff a one-off bonus, because it doesn't carry forwards to the incoming owner, so it has no knock-on effect.
Mm-hmm.
And I think overall, just on that staff costs, I think it's keeping a careful eye on all of your costs. Looking at the profit and loss. That's as we've already mentioned. I mean, the buyers will look at their accountants, etc. So it's certainly important on an ongoing basis to keep a close eye on costs, but perhaps even more so in the run up to coming to the market.
Yeah, it all adds up.
How important then is gross profit margin?
It's extremely important, Sam. It's something that buyers will be very much sort of focused on as part of their review of the business opportunity when it comes to the market. As a general guide, I mean, the average UK margin we see is somewhere between sort of 30 and 32%. But this does vary around different parts of the UK and also depends on the makeup of the business as well. For example, if there's sort of wholesaling in the business or a lot of homes, for example. If the margin is low, certainly below those sort of levels, we would certainly recommend our client spends an increasing amount of their time on the buying side, and look to improve this as much as possible. I've certainly been speaking to a lot of clients who are telling me that they are perhaps over the last sort of 12, 18 months have spent more of their time focused on this area, and in some circumstances where their business has allowed, they've perhaps allocated this role to a member of staff to focus solely on it. We've obviously with the aim to increase that margin.
It really does have quite a large impact on the bottom line profit and the valuation of the business as well. I mean, if you consider a £1 million turnover business, 1% margin difference, it's £10,000. Using the kind of standard multipliers that we see in the market for valuations, 7 times £70,000. So it's really worth spending your time on.
Definitely.
It's also important that the accounts are presented clearly and correctly in terms of the gross profit margin. And one of the common errors that we see in accounts is that you've got other elements that are included where they shouldn't be necessarily. There's no right or wrong way of doing it, but it can look better if you do it another way. So, for example, if you've got locum costs entered under your cost of sales, that is going to have the effect of reducing your gross profit margin when you look at those accounts. So better to move them down, put them into the general expenses. And that's typically where we see them. And indeed, when buyers and lenders are looking at a set of accounts, that's where they expect to see them.
Okay, yeah.
So it makes it easier for people to understand. It makes it easier for people to compare your accounts with, what they've seen before or what they're looking at currently. And that, of course, helps to get the message across. This is a good business, it's profitable, and it helps with confidence as well.
So what about the pharmacy premise itself? Should owners consider undertaking a refit in order to sell?
In most situations, Sam, we wouldn't usually advise a seller undertakes its work. There may be certain circumstances, for example, maybe if there's perhaps a longer term sort of plan to remain in the business before selling, then it may be worthwhile going through, obviously, the cost and upheaval as you will enjoy perhaps the benefit of making those sort of changes to the business. But difficulty is you can potentially spend a lot of money with a refit, and there's no guarantee that all of that money will be recouped in the sale proceeds. And also, I think for a lot of buyers, they will want to have their own impact when they come into the business. They'll want to perhaps have different ideas and plans. Don't you think, Scott?
I do. And it's not necessarily a bad thing to, I guess, kind of leave the business looking as though there's some room for improvement. Someone comes in and, maybe it does look a little bit on the tired side. It could do with a refit. We understand that, but that's something that the buyer can take on board and say, I can do this, and there's room for growth in the future, which is an important part of actually selling your pharmacy. If you've maximised everything, there's nothing for someone to do, no growth, no development, then that is a negative.
So almost the opposite maybe of what you'd expect then. Actually, it can be a cost that, like you say, that doesn't get recouped. And if anything, you're stopping someone being able to see that room for growth and room for development.
I think in my experience, I think it's very rare for a buyer to actually I'm just trying to think of examples where buyers have said they wouldn't offer because it needs a refit. That just doesn't sort of come up. As I say, it's buyers take that on board, and I think Scott's mentioned that they get excited about perhaps the improvements they feel they can add to the business, and hopefully see that on the bottom line profitability as well.
Right. Yeah.
So it's not something that, in my experience, comes up as a serious issue for buyers to avoid.
Okay, so is that also then the same or the opposite? In terms of IT, what should owners do if they are in the process of renewing IT contracts or other equipment contracts?
I think if it's possible for them to roll those contracts on rather than signing new ones and tying the buyer into ongoing commitments that they might not necessarily want to be tied into, then obviously that's a benefit. You may use a particular system which you find fantastic, but the buyer may not like that system. They may want to put their own ones in. So the more flexibility, I think, the better.
I'd agree. I think, again, for many buyers who are perhaps pharmacy owners themselves, they may have providers, contractors that they are comfortable using and want to perhaps synergise once they take on your business. So try and maintain flexibility, if at all possible, to allow that to happen.
Yeah, if it's a buyer with more than one shop, then they've probably got their own systems in place that they use across the group. So
they want to incorporate that.
Yeah.
Perhaps once a buyer's found this is something which needs to be addressed, then that perhaps can be done in tandem with that new buyer. Once the sort of sale has made some traction and seems to be sort of progressing as one would expect, you can involve that buyer in those conversations. As obviously once they take over, that's something they'll be inheriting. So perhaps that is something that can be discussed at a later point.
Yeah, indeed. Any kind of similar future commitments, once you've got a buyer on board, I think best to discuss rather than going ahead and signing anything. If you've got the buyer on board, you're relatively well progressed with the legal work. Just have a conversation with them.
Yeah.
Okay. Well, thank you, Scott.
You're most welcome.
And Paul.
Likewise, you're welcome, Sam.
You've covered some key areas there, from creating an exit strategy to making sure you've got the right advisors in place, advisors that really understand the pharmacy market. But if you had to leave our listeners with one key piece of advice, if you can find one, just one, or a place to start, what would that be?
I think in the first instance, if you are thinking about a sale, do contact us. Have a conversation with us. We can talk you through a lot of these things. We can give you a free valuation.
Right. Okay.
It's all confidential. Totally free of charge. The valuation actually itself is quite critical in terms of doing some of the things that we've discussed earlier, having that conversation with your accountant, understanding what your tax liability is going to be and the sales structure and this kind of thing.
We can actually also offer you a free tax review from our sister company, Hutchings Accountants. They're here to support ourselves, to support you, and you can benefit from their vast experience.
Okay, this is Hutchings Consultants Podcast, maximising the value of your pharmacy ready for sale. Thank you for listening.